Hello and welcome. I'm Matthew Bullock, Head of Portfolio Construction and Strategy for EMEA and APAC here at Janus Henderson. And today I'm joined by two special guests talking about small cap. We've got Nick Sheridan and we have Jonathan Coleman. Nick, Jonathan, welcome.
Thank you. Glad to be here.
So Nick, if we start with you, you work within the small cap space and you're sitting across many different markets across the world. So how dependent are the opportunities that you're seeing right now on the broader macro environment? And do you think that small companies can actually thrive?
I think small companies in general can thrive. I think that unless you believe the law of large numbers is dead, and I don't, then it continues to be the case that in the small cap space, it is much easier to grow your revenue line, your margin line, etc. I think if we look around the globe, it really doesn't matter what geography you're in. On a relative basis to large cap, global small cap look extremely attractive. If we look at the US, traditionally they grow quicker than anywhere else. If we look in Europe, you're benefiting clearly from the spending on defense. If we look at the UK, it's a valuation multiple argument. And if we look at Japan and Asia, it's a lot of balance sheet realization and also demand in Australia coming from China. So I think wherever you are in the world, global small cap have their attractions.
So Jonathan, you specialize in the US, you're based in the US. So how does the investing environment feel over there at the moment? And which areas of the market are most exciting to you right now?
Well, there's certainly a lot of excitement around AI CapEx spend. We have a lot of ways to win within the small cap universe in the US and more broadly globally. We like to invest behind a theme we call picks and shovels, pickaxe to the miners. So the companies that are involved in spending for the data center build-outs, of which the Magnificent Seven are spending an extraordinary amount of CapEx, and that's flowing directly to our businesses, which would benefit from that.
And so both of you, deal with investors, so talking to end investors all around the world. So Nick, maybe if we start with you, what would you say are some of the common misconceptions around small cap investing?
I think there's a very big misconception around the risk that's involved in small cap investing. I think people, yes, it is cyclical, but I think if you look over the longer term, as I alluded to earlier, you'll generally find that global small cap grow quicker than global large cap. But because they're illiquid, when people decide that they want to sell that area, you get those extraordinary opportunities where not only can you get the operational compounding effect of growth being better, but you're also able to get valuation multiple expansion. And I think that is where we are at the moment. Because of people's preconceptions about risk, they haven't quite realized that opportunity yet.
I would just add that I think it's a common misconception that small caps need a very low interest rate environment to thrive. And in fact, history would tell you just the opposite. In fact, 2 of the decades of best small cap performance in recent stock market history would be the 1970s during a stagflationary environment, and then the first decade of the 2000s, both of which experienced higher interest rates. That generally coincides with a reasonably robust economic environment. And to Nick's earlier point, the power of operating leverage for small cap companies is very important because our profitability is generally at a lesser starting point than that of large caps. And so the magnitude of the earnings gains from operating leverage can be quite powerful.
So another piece actually, Jonathan, just with the US market in particular. So you've got the midterms coming up in November. So how much of an impact is that going to have on the small cap space? But also what other key drivers could change the market in the year ahead?
I do think as a general rule that the perception of the impact of politics is perhaps a little bit overdone. Ultimately, we're trying to find great businesses that can thrive in a variety of different economic environments, that can control their own destiny, that have attractive return opportunities through their internal investments and through M&A. And we're able to find companies that are able to do that. So we pay attention to what's going on politically, but I don't think it's a primary driver for the return profile of the small cap market.
And then finally, a question for both of you. You've both worked in the small cap industry and in the industry more broadly for a while, for quite some time. So if you had to give your younger self one piece of advice on the small cap side, what would that be? And Nick, I'll start with you.
I think both in the small cap space and also anywhere really, just remember the law of compounding. Compounding both in investments and habits pays off. The longer you do it, the more return you get.
Jonathan, your one piece of advice.
I guess I'm a slight derivative on what Nick said, but I would say, don't worry about the variability, the ups and downs in the market. If I had learned to do that earlier in my career, I might have less gray hair than I have. So that's what I tell myself.
Wonderful. Well, Jonathan, Nick, thank you very much for joining. We could obviously talk for a lot longer, but we'll save that for another time. So thank you very much, guys. And also thank you very much to our audience for listening.